A very good morning to one and all. A warm welcome to all the ladies and gentlemen in here to the Biocon Limited's Q4 FY21 earnings conference call. All the participants will be in the listen-only mode, and there will be an opportunity for you to ask questions after the opening remark concludes. Should you need to raise questions, please select Raise Hand option under the Reactions tab of your Zoom application. We will call out your name and unmute your line to let you ask the question. While asking, please begin with your name and your organization. Please note that we will not be monitoring questions on the chat box, but you can raise any technical concerns that you may be facing for our support team to help. This conference is being recorded, and I would now like to hand the conference over to Ankit from Biocon Investors Relations. Thank you, and over to you, Ankit.
Thank you, Melvin. Good morning, everyone. I hope you are fine and in good health. I am Ankit from Biocon Investor Relations team, and I welcome you all to the earnings call for the quarter. To discuss the company's performance and outlook today, we have with us the Biocon leadership comprising Dr. Kiran Mazumdar-Shaw, our Executive Chairperson, and other senior management colleagues. I want to take this opportunity to remind you about the safe harbor statement. Today's discussions may be forward-looking in nature, based on management's current beliefs and expectations. It must be viewed in concurrence with the risks that our business faces and that could cause our future results, performance or achievements to differ significantly from what is expressed or implied by such forward-looking statements. At the end of this Zoom call, if you need any further clarifications, you can get in touch with us. Now I would like to turn the call over to Dr. Kiran Mazumdar-Shaw. Over to you, ma'am.
Thank you, Ankit. Good morning, everyone. I welcome you to the earnings call for Biocon for the fourth quarter and for the full year fiscal 2021. I would like to start on a note of hopeful optimism that we will overcome this devastating second wave of COVID-19 sooner than later through mass vaccination. I wish you and your families good health and safety. The centre's announcement that all Indians above the age of 18 will become eligible for vaccination starting May 1st will enable corporate India to vaccinate their employees and immediate family members, which will certainly help us to build the much needed vaccine-induced immunity against hospitalization. Biocon is also at the forefront of this fight against COVID-19. Our subsidiary Syngene is an accredited vaccination center, and we are offering our vaccination services to all companies operating in the Electronic City area. The Biocon Group is also catering to the countrywide demand for remdesivir, itolizumab, and cytosorb. Meanwhile, we have taken significant precautions and measures to ensure that our employees continue to work in a safe environment and wherever possible work remotely. We continue to assess the situation and operate as per government guidelines as they evolve in different regions. This second wave has once again introduced uncertainties in our business operations as well as supply chain logistics. However, we will do everything to serve our patients and customers in every possible way despite all these challenges. Now let me discuss with you the key developments of the quarter. Let me start with some management updates. Shreyas Tambe, former Chief Operating Officer at Biocon Biologics, has been promoted to Deputy Chief Executive Officer of the company effective March 1st, 2021. Shreyas has been with the company for over 20 years in operational and strategic leadership roles. He has led large, diverse teams at manufacturing, quality, R&D, and projects and engineering during his tenure within the Biocon Group. Biocon Biologics also appointed Sushil Umesh as Chief Commercial Officer, Emerging Markets. Sushil has over 30 years of experience in the pharmaceutical industry, working in India, France, and sub-Saharan Africa for leading global pharma companies. With Dr. Arun Chandavarkar taking over as the Managing Director of Biocon Biologics, Shreyas Tambe as the Deputy CEO, and Sushil as the CCO Emerging Markets, I believe we now have a strong leadership team to drive the future growth of our biosimilars business and return the company to its high growth trajectory soon. I would also like to announce the appointment of Indraneel Sen as the CFO with immediate effect, concurrent with Anupam Jindal, who has stepped down from the position of CFO at Biocon Ltd for personal reasons. Indraneel was earlier the Vice President of Finance at Biocon and has since 2014 and has performed various key leadership roles within the finance department. Now coming to key highlights of the quarter. Biocon Biologics received marketing authorization approval from the European Commission for both biosimilar bevacizumab and biosimilar insulin aspart. This is a very important development. These are products which we have co-developed with our partners Viatris, and we expect to launch these products in the near future. As far as our generics business is concerned, we received US FDA approval for everolimus, generic Afinitor, an immunosuppressant indicated to prevent rejection of organ transplants and used to treat renal cell cancer and other tumors. We also entered into a partnership with Libs Pharmaceutica, a leading pharmaceuticals company in Brazil, to develop and commercialize our portfolio of generic drugs in Brazil, which, as you know, is a very large market and has the world's sixth most populous country in globally. Our research services business, Syngene, crossed a significant milestone with the extension of its collaboration with BMS until 2030. The new agreement includes an expansion across the breadth of drug discovery research and a 40% increase in the number of scientists and an additional 50,000 square feet of dedicated laboratory space. I will now present the key financial highlights, starting with the quarter and followed by the full year. Coming to financial highlights for Q4 fiscal 21, the fourth quarter delivered a year-on-year growth wherein revenues increased by 26% from 1,621 crores last fiscal to 2,044 crores for this quarter. Revenue from operations stood at 1,839 crores, up 18%, driven by healthy growth of 53% from biosimilars. Research services grew at 8%, whilst generics reported a growth of 3%. We recorded gross R&D spends of 136 crores for the quarter, which corresponds to 12% of revenues ex Syngene. Of this, 127 crores is expended in the P&L as R&D expenses, while the balance has been capitalized. The increase in R&D expenses accounts for higher spending in novel biologics, biosimilars, and generics. We also booked a forex gain of 7 crores this quarter, but this compares to a gain of 35 crores last year for the corresponding period. EBITDA for the quarter is 641 crores compared to 382 crores for the same period in the previous financial year, and EBITDA margins for the quarter stood at 31% against 24% in Q4 FY20. Net profit for the quarter is 257 crores. During the current quarter, Biocon ceded control over the board of directors and operations of Bicara Therapeutics Inc. to enable it to operate independently under a US-based leadership team and raise funds to advance its development programs. As a result of this change, Bicara was classified as an associate from a subsidiary under IND-AS. Consequently, the investment in Bicara was fair valued, resulting in a gain of 160 crores, which is reported under other income for the quarter. Adjusting for Bicara's fair valuation gain, our EBITDA during the quarter was 481 crores, reflecting an EBITDA margin of 26%. Net profit from continuing operations, excluding the exceptional expense, was at 97 crores, which is down from last year's 132 crores. Core margins, however, which is EBITDA margin net of licensing, forex and R&D, stood at 32%. During fiscal year FY21, I would now like to come to the full year financials. Total consolidated revenues grew to 7,360 crores, up 14% compared to 6,462 crores last year. Revenue from operations was 7,106 crores, up 13%. Biosimilars reported a 21% growth from 2,315 to 2,800 crores this fiscal, followed by research services, which delivered 9% growth to report 2,184 crores in revenues. The generics business grew 6% year-on-year basis, reporting revenues of 2,336 crores. We incurred a gross R&D spend of 627 crores during the year, corresponding to 13% of revenues excluding Syngene. Of this, 553 crores is reported in the P&L as R&D expenses, while the balance has been capitalized. The capitalized amounts relate to biosimilar development expenses. For the full year, we booked a forex loss of 9 crores compared to a gain of 65 crores last fiscal. EBITDA grew at 8% for the year, 1,907 crores, and EBITDA margins at 26% for FY21, down from 27% last fiscal. Net profit stood at 754 crores. Adjusting for Bicara's fair valuation gain, our EBITDA for the full year was 1,747 crores, reflecting a margin of 24%. Core margins stood at 32%, down from 33% last year. And net profit from continuing operations, excluding the exceptional expense, net of taxes, was 594 crores, down from 789 crores last fiscal. Coming to the review of our business segments, performance for the fourth quarter and full year, let me start with generics. Our generics segment reported modest growth during the quarter on account of headwinds we encountered by way of pricing pressure on both APIs and formulations, travel restrictions that delayed regulatory approvals also denied us from certain growth opportunities, and relatively subdued API revenues as well as formulation launches. The segment reported quarterly revenues of 578 crores, a 3% growth over the corresponding period last fiscal. The quarter's PBT stood at 73 crores versus 71 crores. PBT margins were at 13% versus 13% in Q4 FY20. On a full year basis, our revenues grew by 6% to 2,336 crores, with a profit before tax of 13%, supported by a double-digit growth in generic formulations and a modest single-digit growth in APIs. As we indicated in the previous quarter, revenues for our API business in the second half of the fiscal were relatively subdued compared to the first half, attributable to stockpiling by customers who were anticipating COVID-related supply disruptions. This, of course, led to high demand for APIs in H1. Our revenues for the formulation business were impacted by the absence of new product launches due to delays in the inspection of our facilities, as I mentioned earlier. We have also witnessed pricing pressure for some of our critical products, and to mitigate the impact of pricing pressure, we continue to undertake several initiatives in cost improvement and optimize our systems and processes to drive operational excellence. We received 4 Drug Master File approvals for our products in the US, EU, and most of the world markets during the quarter. While the travel restrictions have impacted new market entries of APIs, we have been working relentlessly to expedite geographical expansion. 10 DMFs were filed in most of the world markets. After some initial COVID-related delays, the construction of our greenfield immunosuppressant plant at Visakhapatnam has started returning to normalcy. However, we have to watch the progress based on the second wave. While we expect the facility to be commissioned in CY calendar year 2022, as I mentioned earlier, we must be aware of potential disruptions that could happen from the second wave of this pandemic. In our formulations business, our key statin products continue to retain mid to high teens market share in the US. Our first immunosuppressant formulation, tacrolimus, launched in Q3 FY21, has started to gain market share. We also received US FDA approval for everolimus, which is generic Afinitor, and this is an immunosuppressant indicated to prevent organ transplant rejection. It is also used to treat renal cell cancer and other tumors. This is a vertically integrated product which further fortifies our global positioning in immunosuppressants. We expect to launch this product in FY22. We continue to build on our generic formulations portfolio by filing abbreviated new drug application for vertically integrated products in the US, in addition to market authorization applications and dossiers in Europe and most of the world markets. The expansion of our generic formulations business outside the US remains a key area of focus. Our partnership with Libs Pharmaceutica in Brazil was a highlight this quarter. In another crucial progress towards establishing a strong presence beyond US, we received a GMP compliance certificate from MHRA UK for our formulation manufacturing facility located at Biocon Park in Bengaluru. Overall, the generics business continues to be in an investment mode. We remain focused on our strategic priorities and will continue to deploy capital for creating capacity and adding new products through our R&D efforts. As we work towards strengthening our generics business, we expect this segment to demonstrate modest growth in FY22 and strong uptick in FY23 onwards. Coming to novel molecules, our novel assets continue to be driven by our inherent capabilities and external collaborations. Equillium, our US partner, reported encouraging developments on the clinical advancement of itolizumab, a first-in-class anti-CD6 monoclonal antibody. Equillium remains excited about itolizumab's therapeutic use in acute graft versus host disease, lupus and lupus nephritis, and uncontrolled asthma. While COVID delayed clinical studies in 2020, we are awaiting clinical data from all their studies in calendar year 2021. Itolizumab was also launched in India for treatment of COVID-19 under emergency use. We will have the first cut data on the ongoing phase 4 studies shortly, which will further validate the potential of itolizumab in effective ARDS treatment. The demand, as you must have seen, for itolizumab is far exceeding our ability to supply during the second wave of the COVID-19 pandemic. And we expect to catch up with the demand sometime in mid-June. Our COVID portfolio comprising remdesivir under a voluntary license from Gilead, Cytosorb and itolizumab continues to serve COVID-19 patients in the wake of this second wave. Now coming to biosimilars. Biocon Biologics has recorded revenues of 664 crores in this quarter, a year-on-year growth of 53%. EBITDA margins were at 25% with absolute EBITDA growth of 81% year-on-year growth. And however, I must point you to the fact that last fiscal the quarter was an exceptionally low quarter. We have seen a sequential decline of 14% revenue growth decline and a 22% sequential decline in EBITDA growth. So I would like to now say that profit before tax stands at 68 crores. Moving on to the full year performance, Biocon Biologics recorded revenues of 2,800 crores, representing a year-on-year growth of 21%. EBITDA margins was at 27% versus the 33% in fiscal year 2020. Net R&D costs increased from 178 crores in FY20 to 284 crores in FY21. This reflects the good progress we are making on several of our programs. Profit before tax therefore stands at 365 crores compared to 428 crores in FY20. I would again like to emphasize the fact that R&D investments are critical to future growth, and we believe that this is an investment that needs to be looked at very differently compared to other expenditure. Over the last year, we have seen a slight uptick for Fulphila in the US and steady growth for Ogivri. Despite competition, these products have shown resilient performance. We had launched Semglee in the US in fiscal year 2021 and have seen a slow but steady ramp up in market share. In Europe, our sales continue to improve on the back of new market entry and improved market share in key markets. Based on Equivia data, Ogivri continues to be a leading biosimilar trastuzumab in Australia and Canada. While we have seen decent growth of 21% in FY21, there were certain business challenges that were amplified by COVID-19, restricting our ability to achieve our targets. Our partner Viatris is deploying various strategies to ensure the good growth of our commercialized products in the US and other developed countries. While COVID-19 presented some challenges in emerging markets such as tender delays and reprioritization of budgets within healthcare systems, we continue to see strong demand for our biosimilars in these markets, resulting in good growth in our B2B and emerging market business for the year FY 2021. We have garnered a significant market share in many key markets such as Algeria, Brazil, and Malaysia. Moving on to the R&D pipeline, we are pleased to announce that we have received European Commission's approval this month for our biosimilar bevacizumab, developed in partnership with Viatris. This follows the approval of our biosimilar Aspart in Europe last quarter, giving us a robust portfolio of 5 approved biosimilars in Europe, along with an economic interest in 2 more approved in-licensed products. We are awaiting feedback from the US FDA on the timing of the site inspections for biosimilar bevacizumab. We have noted that the US FDA has recently issued guidelines for virtual inspections for overseas facilities, and we are now working with the agency to see how soon we can effect this inspection and as we have already received a positive outcome from the US FDA on our BLA submission for both insulin aspart and bevacizumab. Last year, we received WHO pre-qualification for our biosimilar trastuzumab, which covers 46 LMIC countries. Whilst we have recovered from the impact of the first wave of the pandemic, Uncertainties with the second wave continue in the near term. So far, we have not seen any significant impact on our operations, but we are closely tracking the evolving situation. The biosimilar market, whilst becoming increasingly competitive, continues to offer attractive opportunities for vertically integrated players like us. We expect to continue the momentum and improve market share for our current commercial products and expect to launch biosimilar bevacizumab and insulin aspart in the developed markets in FY22. We also expect to make good progress in our robust R&D pipeline. We believe that we are well positioned to grow our biosimilars business globally on the back of our robust business fundamentals, scientific know-how, low-cost manufacturing setup, early mover learnings, and a broad product portfolio. I would also say that at this point, we are confident that FY22 is in a position to show higher growth than this fiscal. Lastly, let me come to research services or Syngene. During the quarter, Syngene reported revenues of 659 crores, up 8% over Q4 FY20. PBT for the quarter stood at 24% versus 25% for FY20. For the full year, Syngene reported revenues of 2,184, demonstrating growth of 9% against the corresponding previous fiscal. PBT for the year stood at 20% versus 22% for FY 2020. Syngene's Mangalore API manufacturing facility completed the qualification process during the quarter and is now a GMP certified unit. Syngene continued to build on its integrated drug discovery and development portfolio during the year, including a 5-year collaboration with 3DC, the drug discovery development subsidiary of Deerfield Management Company, and is proud of its partnership with Albiro Pharma to develop a drug that will help to treat specific genetic liver diseases, primarily in children. Syngene also continued to support its clients on various research projects, including leukemia, Parkinson's disease, inflammatory disorders, fibrotic disorders, and orphan diseases. Based on Syngene's strong fundamentals, sound business model, robust liquidity position, client base, and healthy fiscal risk profile, CRISIL and ICRA upgraded Syngene's credit rating during the year. In conclusion, I would say that these are challenging times, testing our resilience, intelligence, agility, adaptability, and other attributes that a business must display to stand out in a crowd. At Biocon, we are conscious that the pandemic is far from over, and it may continue to riddle us with new challenges at regular intervals. That said, we have spent the past year adapting to the new normal. We identified new areas that needed work and made amends. We worked hard over the past year to prepare ourselves to tide over past eventualities. Big or small, these eventualities were something we were very much focused on overcoming. Consequently, despite the headwinds, which resulted in some setbacks, we had a string of encouraging developments, which laid a solid foundation for our future growth. We are confident of the long-term opportunities in every segment where we operate and our ability to deliver value to patients and customers and stakeholders the world over. In FY22, we expect to retain the growth momentum led by higher revenues in biosimilars, research services, and generics. We will continue to focus on the portfolio, strengthening the development pipeline and fast-track capacity enhancement. These initiatives will bolster our pursuit of enabling access to affordable therapies to patients worldwide and will have us positioned well to deliver on the expectations of our partners and stakeholders. With this, I would like to open it up to the floor for question and answers.
Thank you, ma'am. Ladies and gentlemen, we will now start with the Q&A session. Just a reminder, please select raise hand option under the reactions tab of your Zoom application. We will call out your name and unmute your line to let you ask the question. We request you to label your name on Zoom properly so that it is easy for us to identify. Also, while asking your question, please begin with your name and organization. You may want to limit your first set of questions and come back in the queue for the follow-up. We'll take the first question from Prakash Agrawal, Axis Capital.
Hi, thanks for the opportunity. Good morning to all. My first question, madam, is on the guidance. Is there a rethink on the guidance that we were, last quarter we said that we will review the guidance for our biosimilar business. Is there a rethink there?
If you remember, Prakash, I had last quarter itself indicated that the $1 billion target was unrealistic at this point in time, and that was already conveyed to you. In terms of guidance, I think we will need a few quarters before we, clearly indicate what we see as the growth opportunity. But all I can say is that at this point in time, we have seen a growth in the biosimilars business of 21% this fiscal. I can confidently say it will be higher than that.
That helps. And secondly, ma'am, on Q4 performance, you had a detailed opening remarks, but while you mentioned that there has been a Q&Q decline in the biosimilar business, and also EBIT margin has come off. So it is largely, when we see that market share data is largely stable or marginally increasing. So do we come to a conclusion that in the US or developed market there has been a higher pricing erosion? Would that conclusion be correct?
But certainly there has been there has been some price erosion, but I think there has been a price erosion, but I think more than that, I think we have had certain increased costs, and as you can see, our R&D costs have also been very high this quarter and this fiscal. So all that has contributed to this, and we do need to basically make sure that we focus on higher revenue growth and make sure that we get greater contribution as a result of that to our EBITDA and EBITDA margins.
Okay, got it. Great. I have more question. I'll join back the queue. Thank you and all the best.
Thank you, Prakash. The next question is from the line of Damayanti, HSBC.
Hi, good morning. Thank you for the opportunity. This is Damayanti from HSBC. Ma'am, my first question is on some of the in-market product in the US, such as trastuzumab and Fulphila. So especially for Fulphila, our market share has been steady if we look at the market data, but we have seen a really strong pickup from some of the competing biosimilars which have entered relatively recently. So my question is do we have scope to improve our market share from here, and what could be the factors helping us to achieve better market share in market products?
So I think Viatris is certainly looking at this opportunity to increase market share in the developed markets, and I think they will focus on how they take on the competitive forces that they're seeing today. So I am very confident that Viatris will focus on garnering market share, but that will likely lead to some price erosion as well. So I think it's really a question of how do you want to play the market, but I think Viatris is very aggressive.
Thank you for your response, ma'am. My second question is on bevacizumab, which we are hoping to launch in the US in near term. So again, that market, when we look at the competitive scenario, right now 65% market share is taken up by 2 biosimilars which have entered before us. So with this kind of market share going to the incumbents, do you believe Biocon will be able to make any, significant market share or sales given the competition and pricing erosion in that particular segment?
So, Damayanti, first and foremost, yes, it is most unfortunate that COVID denied us entry into the US market, as we were expecting to get approval in December 2020. But that said, I would think that given the fact that we are extremely competitive in terms of bevacizumab, Viatris and Biocon believe that they can still enter the market and quickly garner good market share. It will take some time because it's always it is always beneficial to early entrants, and it takes time for the follow-on companies to take away market share. But we believe that the biosimilar opportunity is going to be a very large opportunity over the next few years. And given the competitive, the market competition that we are seeing, we believe that we are in a good place.
Thank you, ma'am. I'll get back in the queue for more questions.
Yeah, we have the next question from Neha, JP Morgan.
Yeah, thank you so much for taking my questions. Ma'am, on the biologics business, the 14% revenue decline that we have seen, is it fair to assume that all of that decline is essentially due to price erosion in the US, or are there any other moving parts in that?
No. Generally, what happens is that, as you know, the US, Viatris's year ending is December, and we always see a slight decline in the fourth quarter, because what we generally see is that they do basically cover their requirements in the third quarter, and then we see a slight decline in the fourth quarter. So we believe that although the third quarter had a higher, realization than the fourth quarter, we believe that this is a natural trend that we are seeing every year. So we are not that concerned, but basically what we believe is that we have lost significant opportunities because of our inability to launch, for instance, bevacizumab in the US market. That was a significant hit for us, and there have been COVID impact, which has not allowed certain existing products to garner increased market share. So we believe that you will see improvement in the coming quarters.
In that case, ma'am, the EM business wasn't impacted quarter on quarter. That continued to show momentum. That would be a fair assumption?
Yes, the emerging market business did see growth, and we expect it to be even greater in the coming quarters.
And my second question is on the guidance that you mentioned, that FY22 growth is likely to be higher than the 21% we've reported. One, does that assume a launch of Beva in the US, biosimilar Beva in the US? And second, what would be the moving parts for that growth? Would it all be driven by developed markets? So you mentioned emerging markets. So how much of that growth is dependent on US and Europe?
Whilst I can't share the breakup, all I can say is that we expect very significant contribution from emerging markets, and we expect good contribution from the developed markets and from new products as well. So all of these are expected to contribute to good growth in the coming fiscal. And to answer your question, yes, it is also riding on some revenues coming from bevacizumab.
Thank you, ma'am.
Thank you. The next question is from Shyam Srinivasan, Goldman Sachs.
Yeah, hi. Thanks for taking my question, and thanks for the opportunity. My first question is on the biosimilar core EBITDA margin, right? There has been a lot of variability around R&D QOQ, so I'm kind of looking past that and looking at core EBITDA margins. I think the press release talks about 36% for fiscal 21, but I'm just curious about Q4, what the core EBITDA margins for Biocon Biologics are, and just trying to link it to the point around price erosion. Has there been a material QOQ impact in that core EBITDA margin?
So perhaps I would like to turn this question over to my colleagues Chinnappa and Arun Chandavarkar.
Shyam, hi, good morning. The core EBITDA margins for the quarter is 33%, but on a full year basis, it's 36%. I encourage you to look at the full year rather than the quarter. The quarter has some moving parts, some one-off items that skew the numbers. The full year average is a better indication of the year's performance.
So, Chini, is that the pricing pressure, has it led to that, whatever, 33 versus 36? Or you think, and when we look forward, how should we look at that number? The north of 21% of growth, but what about margins, core EBITDA margins?
Yeah, I think we believe that the dip in Q4, the sequential dip in Q4 is a kind of a one-off, and it will, really look at it on a full year performance. That one-off items have skewed or brought Q4 down lower. It's not structural. The full year is a better view of the performance.
And Chini, sorry to just persist on this. The severance pay, does it come in that number there?
Yeah.
Does it come?
Yes.
So,
Yes, I think.
Sorry, this numbers are just revealed is excluding severance pay and excluding exceptional items.
Sorry.
Got it. Okay. My second question, in general, on the rest of the business, the generics business. Again, pretty flat kind of growth for the year. But just is there an outlook? We are again starting to see maybe at least some of the API numbers start picking up again. For if I look at trade data, if I look at competitors. So just curious around the outlook for this business for fiscal 22.
Shyam, I think Kiran already alluded to in our opening commentary that we expect a double-digit growth for formulations business in FY22. And we expect a low single-digit to flattish growth in our API business for two reasons. One, we are also, as we're getting ready to launch our formulations in the US, a lot of the APIs that we were earlier commercializing would be used for formulation sales. And second is, as we create new capacities, we are currently running our plans full. So we do not, till we get Vizag commissioned and ready to commercialize, till we get our Hyderabad facility where we are investing in a facility commissioned and ready to be commercialized, we do not expect API business to grow significantly. I think that this is also in line with the guidance that we had given last year. If you recall, same time for FY22, we had given a similar guidance that we expect API business to grow mid-single digit and our formulations business to grow mid-teens to high teens. And that's exactly what happened in FY21. And we expect a similar trend in next fiscal year. And again, as Kiran mentioned, we expect the growth to start in generics business starting in FY23. That's when we expect more launches in the US in our formulations business. Plus, we expect additional capacities to be commercially ready to increase the sales in our API business.
Yeah, thank you. Just data point, 80-20, is that the same split of API to formulations?
That's right.
Got it. And last accounting question, this 160 crore of gain doesn't seem to be showing up on tax line similarly. Is it not a cash gain? I'm just trying to understand that. Thanks.
Yeah, there's no tax impact on that 160 crores. It is a one-time step up that we have taken because of the change in the way Bicara was accounted. And that has been shown as in the other income, but for all practical purpose, it's not the cash income which is there. But there is no tax associated with this gain.
Thank you, and all the best.
Thank you. The next question is from Surya Patra, Phillip Capital.
Thanks for this opportunity. So just on a clarification on this Biocon thing. So we have reduced our exposure and hence is it fair to believe this R&D intensity will see some kind of moderation because of that? And whether this quarter also a sequential reduction in the R&D, is it because of that fact?
That is correct, Surya. So this will no longer be consolidated with our financials, but it will be treated as expenses or loss coming from associates. So there were expenses of roughly 70 crores in R&D for Bicara, which is not included in the R&D line.
Okay. So anyway, it is not impacting as of now. Okay.
No. So this will be discontinued. I mean, as an associate, obviously the R&D expenses of Bicara will no longer be directly impacting our P&L. But maybe Siddharth, you might want to explain it.
Yeah. So since this is no longer a consolidated entity, and Bicara is looking at doing fundraise in the coming fiscal, wherein Biocon will be diluted further. We have lost control on the appointment of board of directors because the way the fundraise happens in the US, there are certain rights that the incoming shareholders look at, and they don't want really the parent company to control the board, and hence we had to give up the board rights. So on a go-forward basis, our obligations, our financial obligations are no more there for Bicara. We have already funded $40 million so far in Bicara to get Bicara to this stage, and all the future funding will be raised directly by Bicara through a combination of various funding rounds. And since our obligations are restricted, the future loss that we will take on account of Bicara will also be restricted.
Thank you, sir. My second question was on the kind of margin trajectory, sir, for the subsequent period. While the opportunity on the biosimilar side that really looks very strong, there is no change to the kind of ultimate expectations and all. But obviously, last year was a kind of abnormal year because of the COVID, which impacted in multiple manner to our biosimilar progression. So going ahead, while that is still there, that is the impact of that is still visible. That is one. And we have seen a static kind of situation in terms of penetration of our product or market share of our product. So possibly that could lead to a kind of further price correction from our side in terms of offering and could impact the margin. And subsequently, even on the various revenue stream front, whether it is on the Syngene front or in the small molecule business front, there are enhanced activities that is on, which obviously possibly will start benefiting FY23 onwards. So what is the kind of margin expansion or what is the kind of margin scenario that one should expect in the subsequent period, or let's say in FY22, given all this challenge as well as the long-term opportunities?
So Surya, I would answer it slightly at a higher level. I would say that the core margin is something that you should look at rather than the reported margin because of R&D being lumpy, as we have said in the past. Both generics as well as biosimilars businesses continue to invest in R&D, and some of the activities whatever delays we saw in FY21, we expect activities to resume in FY22, which can increase the R&D expenses. But from a core margins perspective, we do not see a directional shift in FY22 at a group level.
So, sir, if I can just add one more, this ISP award for our new monoclonal, this MAPS facility, is this having any kind of meaningful implication for us to think about for this opportunity?
Yes, I believe this is an important recognition. Actually, this is a huge expansion for Biocon, and there are many opportunities. It's also being obviously expanded for our own growing pipeline of products, but I think basically allows us to be, a scale where we can address large opportunities. So I do believe that this plant is going to serve us well in terms of various growth opportunities going forward.
Yeah, thank you, ma'am. Thanks a lot.
Thank you. We will take the next question from Sameet, Morgan Stanley. Samir, you are there?
Yeah, can you hear me?
Yeah.
Yeah, we can.
Okay, great. Thanks. And good morning, everyone. Again, quick question. When we look at a macro level, biosimilars look like a great opportunity. It's not only DM, it's EMs. You have a whole basket of products. They're multi-billion-dollar per product sort of addressable market with just two to four players right now in the market. So it all looks good, but at the same time, when we look at micro level, that what is getting translated into your kitty, into your P&L, then the numbers are very small and they're just not going up. So just wanted to understand what's going to change this. What's going to take our market share up? You've got multiple products in multiple countries, but it's not showing up in our results.
That's a good question, Samir. I think the way I look at it is the following. Let's also accept the fact that calendar year 2020 was a very, very difficult year for everyone, especially us, because you can see that we actually, were left out of the market for no fault of ours. I mean, if you look at the, inability for plant inspections, I can tell you that was a really bad miss for us because we were really looking forward to the bevacizumab approval. Everything went seamlessly till this last minute. We actually are well positioned to garner market share, and as you know, many of our timings of entry into many markets, especially the US, were also flawed. For instance, I do know that Beatrice did miss out on a contracting cycle opportunity for Glargine in FY2020. And so many misses have happened as a result of either timing or delays of approval, etc., etc. So I am very confident that when we get over these impediments and hurdles, we will have a very large spurt of growth. As far as emerging markets are concerned, we are actually putting in all efforts to make sure that we are very significant players and we basically tap all these opportunities. As you know, we have had a management change and we are looking at all these opportunities in a very different way. And we expect that this will actually come back to the kind of growth trajectory levels that we were always pursuing. So I would say that you will start seeing better growth and improved performance in FY22. And I think from FY23, you will really see a very strong uptick. That is my take on the opportunities, the performance, and our capabilities to garner market share globally.
Okay, great. Thanks.
I think this is a huge opportunity. There are few players. We have all that it takes to be very successful, and we want to deliver on that.
Excellent. Thanks for this, Kiran. And the second question is, you talked about in the previous call that there should be 3 more drugs, biosimilar drugs, which should get into clinical trials as we go forward. Any update timelines on that and what it can do to your R&D spend in fiscal 22?
Yeah, so the fiscal 22 R&D spend is, of course, likely to increase over fiscal 21. And these are important programs because, as you know, it's a bit of a catch 22. If you don't invest in R&D, then you're not going to be able to, get growth through new products going forward. And if you invest in R&D, obviously, it does basically challenge your financials in some way. But we believe that R&D is a very necessary investment for our kind of business. So we will continue to invest in R&D. You mentioned 3 molecules and we are on track to get into the clinic. I think there will be increased spends, but we are obviously calibrating the spends based on our business.
Okay, one final question from my side. Looking at the FDA's guidelines for virtual inspection, how executable or how onerous do they look like? Related to that is, how did UK issue the marketing authorization for both Aspart and Beva? I mean, did they come down to inspection, or how was that made possible?
Maybe I'll ask Shreyas Tambe to answer these questions.
Thanks, Samir. I think the guidance is pretty clear in terms of how they want to conduct inspections remotely. And we've actually had experience with other agencies, including the EU, to have done these inspections, and even in the other emerging markets where they've actually moved over to remote inspections. The approval that you specifically asked about, the European agencies have leveraged even our previous inspections while approving our bevacizumab facility in India and the facility in Malaysia as well. So we do have approvals for both bevacizumab and Aspart, one in India and one in Malaysia, from the European agency.
Okay, any timelines, Shreyas, that you can share for bevacizumab, a virtual audit by US FDA, and the approvals that can come about?
Yeah, so at this point, Samir, we don't have specifics in terms of when they will come over exactly, or they will conduct the remote inspection. But needless to say, both Beatrice and us are working closely with them to get a sense of how quickly we can get that accomplished. As we've said previously, the agency has communicated to us that there are no outstanding scientific questions with regards to bevacizumab, and we are looking forward to getting the pre-approval inspection accomplished so that we can get the product to patients as quickly as possible.
Okay, thank you so much.
Thank you. We'll take the next question from Milind.
Hi, thank you very much for the opportunity. I had two questions. The first one was on insulin glargine. Just wanted to understand that during a couple of previous questions, you've said that it was unfortunate that we sort of timed, the timing was not correct for glargine, but now getting into FY22, do you think that we will be able to sort of garner more share as we go ahead? That was my first question. And my second question was for the biosimilar target which we had put of $1 billion, which we have said is as of now looks unrealistic. But I suppose that is in terms of timing. And so going forward, do we see a very strong growth in biosimilars considering the pipeline which we have and the existing products ramping up? These were my two questions. Thank you.
So let me answer your first question. I think definitely we will get to the $1 billion target as soon as we are able to get back to a high growth trajectory. But as I said, we are given an indication that it would happen by FY22, which is unrealistic. It won't happen by FY22.
Fair enough.
And give us a little bit of time, as I said, to basically get back to a certain growth trajectory. Today there are so many uncertainties. At least the US and other markets have opened up for business, so we hope that things will improve. That is our anticipation. But as you know now, India is in a very bad way, so we have to make sure that we continue to watch the situation, but we hope that our international markets will perform well. Now, in terms of growth, as I indicated earlier in my comments, obviously we expect much stronger growth than this year. And we will basically keep you posted on how soon the $1 billion target can once again become visible. As far as glargine sales are concerned, we have. I will maybe ask Paul to comment on the glargine sales, but we do expect that FY22 should see an improved performance in glargine, and Viatris will be able to respond to many of these questions with far more granularity. But we believe that our biosimilars business in the US should see a greater performance.
Thanks, Kiran. Yeah, I'll just add a little bit. I think we've seen some pickup in share already over the course of this year, and as was stated, I think the formulary cycle, there's an annual calendar year oriented formulary cycle. So as we get into calendar 22, there's an opportunity there for getting into the new cycle, and that's a process that's going on now, and that Beatrice is very much engaged in, and we look forward to grow through that process. Beatrice has noted the complexity in bringing this type of product to the market and the expectation that there will be a long revenue stream with a slower ramp up that we're seeing because of these factors. But we do expect that growth as we go into the new formulary year.
All right. Thank you very much and all the best.
Thank you. The next question is from Vipul Shah. Yeah, Vipul, you are connected.
Yeah, hello.
We can hear you.
Yeah, so I just wanted to know what was the R&D spend for Bicara during FY21?
Siddharth, you might want to respond to that.
Ma'am, second. Sorry.
So the total amount of R&D for Bicara was around 180 crores.
180 crores.
Yeah.
And sir, would you like to comment on the performance of Malaysian plant for FY21 at EBITDA level? Was it EBITDA positive or EBITDA negative? And would you like to give any qualitative color on the performance of the Malaysian plant?
Any?
Malaysia continued to operate at a loss in FY21. We see a lot of improvement in FY22. We're really waiting for the glargine pick up in the US for it to turn profitable and give us the desired ROI. But presently it's still operating at a loss.
Would it be possible to quantify the loss, sir?
Yeah, yes, sir. Just give me a minute. It is, we have two parts to it. There is at the PBT level, at the PBT level, it was $33 million of loss, but at EBITDA, we broke even with a roughly $4 million gain.
Okay. Thank you, sir, and all the best for the future.
Thank you. Tushar, you can go next.
Just a clarification of the R&D spend. While there would be increased spend on account of three products,
we can't hear you.
We can't hear you, Tushar. Your voice is distracting a bit.
Am I audible?
Yeah, now it is.
Yes.
Just on the R&D spend, while the three molecules would increase the overall R&D spend, at the same time, Bicara spend would not be there at consolidated level. So, if you could just quantify how much it would be for FY22?
I can't hear you properly.
Sir, we didn't hear your question properly.
Just on the R&D front, while there would be incremental spend on the three molecules, but at the same time, Bicara R&D spend is not going to be at the consolidated level. If you could quantify the overall R&D.
Okay, so Tushar, let me probably try and answer the question. I still didn't hear you completely, but I think what you're asking is the R&D spend going up on three molecules and the Bicara R&D spend no longer being there. And if the question is regarding the guidance on R&D for next year, I think in the ex-Syngene, we have mentioned that we will be somewhere between 12 to 15% of revenues. And broadly, that guidance, give or take few 1 or 2% here, we maintain. I think in generic specifically, we incurred 8% of revenues in FY21. We are looking at spending 11% in FY22. And maybe Chini, if you want to give a specific number for biosimilars in terms of what was the spend as a percentage of revenue in FY21 and 22, I think you'll be able to calculate what should be the spend next year.
Tushar, hi. The net R&D spend for the biologics business was 10% of revenues in FY21. We see that trending upwards, but we're not giving guidance yet on the specific numbers because it's dependent on the progress of the molecules.
We can't see Tushar, so probably he'll come back.
I think why don't you go to the next one?
Yeah, we'll take the next question from Shirish. Shirish, please go ahead.
Yeah, good morning to all. I wanted to understand the capex plan for the coming year, and also what has been the total capex for the foregone year. And my second question was pertaining to the increased cash in the books, and we see the debt going significantly, in the northward directory. There has been significant cash, yet there has been, a spurt of increase in debt. So, I wanted to understand what has been on your mind.
So maybe I'll answer the second question first. So as you know, last year we did a couple of rounds of private equity fundraise in Biocon Biologics. We raised almost 1,900 crores, and a large part of that money was used to repay the debt that was there between Biocon and Biocon Biologics. So the cash that is being held is primarily lying with Biocon to fund the future investment. So the net cash balance in Biocon as of March 21 is roughly 1,500 crores. And the debt that you see, maybe Chini can explain, because a large part of that debt actually is sitting in Biocon Biologics.
Some of the debt was raised in the early part of the year before the private equity funds came in. So the debt in Biocon Biologics has increased, and towards the end of the year, as we receive money from EDQ, that money is sitting on the other side as cash.
And the Goldman Sachs is also treated as a debt, right? The fundraise from Goldman Sachs.
Yeah, for accounting purposes, the Goldman Sachs investment is also treated as a debt, called out separately.
Chini, you might also want to give the capex guidance for biosimilars, then I'll ask Indranil to give the capex guidance for generics.
For FY21, total net spend, net of partner funding was $125 million. In FY22, we expect $100 million outflow on account of capex.
So for FY21, our capex in generics was about 250 crores. In the past, we've guided around 2,000 crores to be the capex over the next 3 years, and at this stage, we continue to maintain that guidance.
Thank you. We'll take the next question from Charulata.
Yeah, I have 2 questions. How many ANDAs do we have pending approval in small molecules?
So Charulata, at this stage, we have 10 plus ANDAs which are at various stages. And there are 2 ANDAs where we had target action date in FY21, where we have no more pending queries with the FDA. But we got the CRL on those 2 filings because of want of a facility inspection by the FDA. But we are looking at multiple launches next year. We have 3 products which are already approved and will be launched in next year. And we, subject to the approval on 2 products which were to be approved in FY21, we are hoping that FDA is able to do a virtual inspection and we can launch those 2 products in next year. But apart from these 4 or 5 launches in next year, we also have many other products which have been filed and are under various stages of review. But the launch date for those products are beyond FY22.
Okay. So we can expect three launches in FY22.
Yeah, as I mentioned that there could be there are 3 new launches in FY22 on already approved products. There are 2 products which are more vertically integrated products where we are expecting the FDA to inspect the facilities and give the approval. So you will have new launches in FY22, and that's what is going to drive that double-digit growth that we guided for the formulations business of the generics vertical.
Okay. And how much is the investment in the new MAB facility?
So if you really look as the numbers come out, we've got about $250 million that is sitting in CWIP. A substantial part of that is for the 2 large MAB facilities that are coming on stream. One which just got the award, and there is another single-use bioreactor plant that is also under construction or under qualification, really.
Okay. And my third question pertains to the WHO pre-qualification. Do you expect, how much business do you expect to generate from that?
So let me respond to that question. I think the WHO pre-qualification is a very important step because there are several countries which look forward to this guidance, to move forward with the commercialization of the product in those geographies. At this point, we wouldn't like to give specific guidance in terms of revenues from each of these markets, but needless to say, it is in line with our mission to see that we can, get product accessible to as many geographies as possible. So it's a part of that mission.
Okay. All the best. Thank you.
Thank you. We'll take the next question from Harith, Spark Capital.
Hi. Good morning. On Bicara, what is our stake now? Have we lowered it from the 100% we used to hold earlier? And the increase in share of losses from associates and JVs to around 70 crores this quarter, is it coming on account of Bicara? And will this be a recurring number?
Okay, Indranil, you want to answer that?
Yes. Thank you for the question. So subsequent to the stake subsequent to losing control, our current stake in Bicara is at about 87%. The current quarter spend of 70 crores, I think in one of our earlier comments we mentioned that in the next year we expect to pick up losses up to 200 crores, which will be limited to the extent of carrying value of investment in the associate.
So 200 crores for FY22 will be the share of losses from Bicara.
That's right.
And then, can you confirm the gross and net debt at the consolidated level?
So the gross debt at a consolidated level is about 4,500 crores, and net debt is around 700 crores.
Thank you.
Thank you. The next question is from Nitya. Please go ahead, Nitya.
Hi, quick one. Can you give us an update on the interchangeability status for insulin glargine at the US FDA?
So as we've said before, we are in conversation with the agency, and this, as we have said before, is a first of its kind for the agency. We have been receiving encouraging feedback. Clearly, conversations have progressed to a point, and we believe that under the 351K pathway, we will have an opportunity to move this forward. But at this stage, the agency isn't in a position to give us a firm guidance on where they stand on this, although we remain optimistic on that progress.
Sorry, just to follow up, do you have a TAD date, and do you have any updates on whether this would require a pre-approval inspection?
So they haven't specifically guided us on a pre-approval inspection at this point, but we are watching how this progresses. As you know, we already have the approval and we have the comparability for this, so we're not really looking at a physical facility inspection at this stage.
Is there a TAD date? Do you have a date on which you're expecting to hear back?
There has been, in general, guidance on where the agency would like this to be, but at this stage, given the pandemic situation, I think a lot of this has been fluid, Nitya, in the recent past.
All right. Thank you.
Thank you. Ladies and gentlemen, this was the last question. We thank you again for joining us today. If you have any additional questions, you can reach out to us anytime. We wish you good health and look forward to seeing you again next quarter. Have a good day. Thank you.